Good morning. Welcome to the Forex Pro Charts weekly video analysis for the week beginning October 31st, 2010. This week we are examining the Great British Pound versus the US dollar, the GU. We start out by looking at the monthly time period chart, and on the monthly chart, as you know, we're looking for a couple of things. First of all, we are looking to see what the overall trend for price is. And we tell this trend with the 50 EMA, the 50 moving average. And in this chart, you can't see it maybe quite as well. You can see that over here it was trending up, but that now it's coming back into the screenshot and it is trending down. And we consider price on the GU to be trending down at this point. It reached the outer edge of our trading field here, moved down, and has not reached the bottom. Now it is moving up and did reverse here below our monthly armpit, which is signified by this thick black dotted line, and price was between the monthly armpit and the weekly armpit. And as you know, anything between the monthly armpit and the outer edge of our trading field, which is the monthly lows, is an area where we consider it likely that price will reverse. So it is possible that price is reversing, that this is not just a long-term retracement, and that price is reversing and will continue all the way back up. But we are at this point considering the GU to be in a downtrend, but keeping in mind that there has been a long-term retracement on the pair. Price currently, at the current time, is slightly below the monthly armpit at the resistance level. It is a little bit more than halfway between the two monthly armpits and is approaching this monthly armpit here. We will look at this point to see whether price reverses again or whether it continues up and possibly even surpasses the edge of our trading field and moves up to new monthly highs. That is pretty much what we're looking for on the monthly chart. We want to see the direction of the trend and look and see where price is positioned on the edge of our playing field. This is telling us that we have the opportunity to trade both buys and sells, and that we have a good amount of room before we are likely to see price have a long-term reversal. Next, we take a look at the weekly chart for the GU, and here we're looking to see the position of our zones and looking to see likely what price will be doing over the next week or so, and where we would be able to take our trades. So as you can see here by looking at the candles for the last 2 weeks, we had formed a new resistance zone here. Price moved down, formed a new support zone as it moved straight back up to the resistance zone in the period of 2 weeks. And we're going to talk about these zones a little bit more on the daily chart when we can see them a little bit better. But in general, there's a couple of things that we want to note on the GU charts that is a little bit unusual. And makes us maybe exercise some caution in our upcoming trades. First of all, these zones right here are new, and you can see that we do not have the 3-to-1 reward to risk ratio that we like to have and that we emphasize so heavily on our odds enhancers. As you can see from this zone, price moved down here, and that is definitely not a 3-to-1 ratio. It's barely even a 2-for-1 ratio. So that indicates that this zone is less stable and less strong and less likely to be an area where price will reverse long term. By the same token, this is a brand new zone. Price has moved up here. That is, again, I would not even call that 3-to-1. It might be barely technically. Now, if price were to continue up here, then this zone might achieve a 3-to-1 ratio. We formed the zone before the ratio was actually finalized because price action has not finished moving. We don't know whether price is going to continue up to this other resistance zone or whether it's going to reverse here in this particular resistance zone and move back down again. Could be that price is going to range a little bit between these two zones. Now, the risk to reward, the reward to risk ratio is an important odds enhancer. It is particularly important if you're looking to see price move long term. So if we are looking, let's take another zone. Let's look back at this support zone. Resistance zone, and there are a couple of things that we would notice about this resistance zone. First of all, price originated here and moved all the way down below this monthly armpit. We can't even see on this screenshot where price finished. It was actually down around here somewhere. But obviously that is much more than a 3-to-1 reward to risk ratio, because your ultimate target is where price ended up before it reversed and returned to the zone. So you would not call this necessarily the ultimate target, although you did have a significant retracement, and conservative traders might want to use it as their ultimate target. But actually, price did not finish moving down here. It finished moving at the bottom down here before it reversed back up, and looks to be very likely that it will be moving back up to this zone at some point. So for traders looking to capture this type of long-term movement over the course of quite a while, you would want to see that 3-to-1 reward to risk ratio, and this would be where you would be wanting to trade. Now, realize that this is the monthly chart, and obviously this particular price movement took over a year and was many pips. And so we are looking at this particular type of pattern on the not a year, I'm sorry, I was thinking we were on the monthly. This is the weekly chart, but anyway, took several months to move down to its low before reversing. So we're looking, you might be trading off of the daily. You might not want to be in a trade that long, and might be trading off of the daily charts, but you would still, the same principle still applies, that you want to see the 3-to-1 reward to risk ratio for whatever chart time period you are trading, and you'd be looking for that, and the same philosophy applies. Now, the reason that we put these zones on the chart, even though we do not have the 3-to-1 reward to risk ratio, is that for day traders who are looking to take a trade off the 60-minute, looking for a bounce off the 60-minute and 5-minute armpits, as we outline in our signature trade setup, the 3-to-1 reward to risk ratio is not as important for that bounce. What we do advise, if we don't have that 3-to-1 reward, you always want the 3-to-1 ratio off of the armpit that you're trading. But if the entire zone does not have that 3-to-1 reward to risk, that simply means that you need to be very aggressive about protecting your profits once that initial bounce has been achieved, and you do not want to leave your trade open and leave yourself unprotected with a risk, because these zones are not as reliable in terms of price movement. The other feature that we want to notice on this particular chart is that we have 3 stacked zones right here, and we'll be looking at these in more depth over the coming weeks in our weekly analysis that we provide every week for 10 major currency pairs for our subscribers. But basically, this indicates a strong area where price is likely to reverse or retrace, because you have zones fairly close to each other. And so there's a strong likelihood of reversal. However, you do want to be careful if you're a swing trader, or again looking for those longer term price movements. You want to be careful as to where you enter that zone, and we would recommend looking at risk to reward ratio, looking at the amount of risk on your trade, and then looking at position in relation to some other features such as this monthly armpit. And in this particular zone, we would see that we're close to the monthly armpit. We've got a very small risk, and so this might be a good zone to take a trade. By the same token, this zone here also looks good, and it looks good because not only the small risk to reward ratio, but because we have this drop base rally pattern on the weekly chart that strengthens this zone. So for swing traders or traders looking for longer term trades, day traders could attempt to take the bounce off of all of the 60-minute armpits. But for traders who want to be more selective, or for swing traders, we would be looking at this zone and the bottom zone as better areas to take our trade. Let's take a look at the daily time. Okay, as we look at the daily time chart, we see that, as we discussed earlier, price formed this new support zone here, and then immediately moved very quickly back up to this daily zone, and you can see here is actually at the 60-minute armpit for this particular zone. So we'll look at this on the hourly chart in more detail to see if we've already gotten our initial bounce or not. But day traders would have placed a trade here, would have seen this coming. If you were an enhanced or premium member of our service, we would have sent you an alert for that trade, and you would have entered your trade right here. Now we don't know yet what happened with this trade. It happened right at the end of the week, and we will be looking at that. But we would be expecting to see a bounce off of the 60-minute armpit. Now whether price then returns down here or moves up is a little bit uncertain. You can see that we have these trend walls, the daily trend walls, are running through and look to be providing a little bit of support and could stop price before it returns down to this zone and push it back up, depending on, and price could kind of bounce along through here, kind of following these trend walls. Again, because this zone is a little bit weaker, we often see that happen, and price may bounce along a little bit, and then when the trend walls and so forth sort of coincide or converge with this monthly armpit, we could see price either move up into this zone and then reverse significantly, or it may reverse, may take a nice bounce at this monthly armpit. So we saw price move here and move very nicely and quickly up. We saw price move down nicely and out nicely, which is a pattern that we like to see in our odds enhancers. So if price does return to this zone, the risk on the 60-minute armpit is very low, and that would probably make a very nice trade with a very nice bounce, because we're seeing some of the things that we like to see on this particular zone at its origination. Now again, it's not quite 3-to-1 depending on exactly where price ends up, but it is a little bit closer than this particular zone was. So this would be a nice trade for day traders to take the 60-minute bounce off the armpit right there. Again, if price moves down here, they'll want to be more cautious, and we'll be talking about these zones as price approaches them. So let's go ahead and take a look at the hourly chart and see what happened, or exactly what price is doing around that 60-minute armpit. Okay, we are looking at the hourly chart now, and we like to look at the origination of the zone, which you can see was right here at the intersection of these trend walls. Price spiked almost all the way up and then moved down, and it moved down very quickly, as we already talked about, and it kind of lingered a little bit in this zone here, but has now moved up and out. And right at the end of the week hit the 60-minute armpit, has not even had time to make its bounce. I think this bounce right here was exactly 20 pips, depending on what your trading plan calls for. If your limit is at that 20 pip minimum that we recommend for very conservative traders, then that would have stopped out at least the first portion of your trade. But this looks like this pattern right here looks like price could continue, go ahead and bounce off that armpit and continue down for some more pips. Of course, we could see price move up to the 5-minute armpit and take a bounce there as well. Looking down here at this support zone, you will notice that we have already seen price return here once, although it didn't move all the way up. So we would want to exercise just a little bit of caution as we if we return back down, because it will be the second revisit to the zone, sort of. So that concludes our weekly analysis of the GU. For more information or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com, and we will see you back here next week. Thank you.